Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Wednesday, April 29th. Firstly to the S&P 500, and here we see the market in a downtrend following that strong sell-off from the major high established 2 trading days ago. Major high was 21.25. Sellers had control of the market and they've continued that trend to the downside, but on both occasions for today and yesterday we saw the market testing down below the 2100 level and with the sellers losing commitment down below that level. This suggests that there is a possibility of a change of trend to the upside. Now we've seen on both occasions the sellers losing control of the market as well, and for today's trading the buyers have only just taken control, very weak control. And we've seen the formation of a small black body candle, so some downside momentum there with the sellers as opposed to the buyers having upside momentum for the previous day in terms of the colour of the body of the candle. This suggests that there is potential for a change of trend back to the upside with this strong support coming in at 2100 and with the Tenkan-sen trading around that area. But very strong resistance at 2114. And the previous major high, 2119, may halt any price appreciation that we're looking for. So a market that's not a terribly good trading market, strong resistance overhead, very solid support down below. I think we need to wait for resolution in either direction. And we could see that to the upside, and what we'd like to see is a strong bullish close above 2119 and then above the major high 2125, or a bearish close all the way down below here at the 2140 level, which is pretty much the end of that solid support through the Ichimoku cloud and to the bottom of the highlighted yellow zone. Now just using the Fibonacci extension tool, we're examining the relationship of this current first time frame downtrend to the immediate previous first time frame downtrend, and here we've seen the market testing down below that 78.6% level and being rejected from there, and suggesting that there is a possibility of a change of trend to the upside. And also looking at the Fibonacci retracement of that immediate previous first time frame upswing, and here we're looking at the market testing down through the 38.2% and through the 50% level and being rejected from both levels, with the market unable to close below those levels, also suggests that there is a possibility of a change of trend. So we'll be looking for confirmation with a higher high and a higher low. Next we'll take a look at the S&P 500 on the hourly charts, the S&P 500 futures that is, and for today's trading we saw the market open well up above the middle pivot point level. The market had an opportunity to bounce off the Ichimoku cloud support with that third candle there, a strong bullish candle, but we didn't see any strong follow through for the remainder of the day. The market then traded off, found support within the Ichimoku cloud, attempting to break out on very weak indecisive candles, and then we saw strong selling coming in with the S&P 500 trading through the middle pivot point level and through the Kijun-sen in a bearish manner. We then saw the market testing down to find support at the first pivot point support level, breaching through there but failing to close through there, with the buyers coming in, testing once again through the top of the Ichimoku cloud. For today's trading, we've seen the market open below the middle pivot point level, rallying through to the Kijun-sen and the Ichimoku cloud resistance, and selling off quite strongly from there with a black body candle, sellers taking control. It does suggest that we certainly could be in for a negative day for the next day's trading, and if the sellers do come into the market quite strongly, we could see the first pivot point support level at 2088 tested. If the buyers are strong enough and they can breach the strong resistance around the middle pivot point level at 2099 and then up to the Kijun-sen indicator around 2101, highlighting the very strong resistance around this region. If the market can breach there, and there may be an opportunity for the buyers to come in and trade through the very weak and very small Ichimoku cloud for most of the trading day. But at the moment it is suggesting that we could see some selling coming in following the very strong price rejection from around that 2100 level. Moving next to NYMEX oil futures, and here we see the the market trading well up above each of the Ichimoku indicators, with the market having transitioned away from that strong downtrending phase that we saw prior, with the buyers coming into the market very strongly in uptrending phase in all three timeframes. For the previous day's trading, we saw the market finding support at the 56.17 level and around the Tenkan-sen indicator, and for today's trading, the buyers coming in solidly, a very strong white body candle, buyers in control, and closing just above the 58.32 level of previous resistance. There is an opportunity here for the buyers to continue trading the market up, and we do have some potential resistance at the $60.68 level. Any selling could find support and strong support at the Tenkan-sen indicator again at 57.53, and then down below there once again down to the 56.17 level. But certainly this market has transitioned from that very weak strong selling back into a market that is trending up in all three time frames, and suggesting that we certainly could see NYMEX oil trading to higher levels. And just looking at the bands here with NYMEX oil, and it does highlight that transition from that strong downtrending phase into a strong uptrending phase. And with the market trading up above the upper band, it suggests we have a very strong bullish bias in the medium-term time frame. For the previous day's trading, we saw the market breach the bands and close within the bands on that indecisive candle. However, no strong follow through to the downside and a change of trend in that first time frame, with the market trading back outside of the bands, looking to the upper band at 57.88-87 roughly to hold as strong support if we do see any selling coming in for the new trading session. Next, moving to wheat futures, and here we see a market that's quite bearish in all three timeframes, trading down below the Ichimoku cloud, below the Kijun-sen, and for the session that has finished trading, closing just below or very close to the Tenkan-sen indicator. We have a market that's rallying off the support level at 466.50, following some strong selling where the $500 level and just above, and the bottom of the Ichimoku cloud held as resistance, and we saw strong selling coming in, then the formation of something of a hammer type pattern and confirmation of a change of trend with today's trading, with the buyers coming in strongly and closing up towards the high, suggesting that we've had the buyers very strongly committed to this change of trend. For the next day's trading, we are seeing, and that's this new candle that is forming, we are seeing some resistance coming around the Tenkan-sen and at the 488 level. And there is a likelihood that we could see some selling coming in around this area. If the buyers are strong enough to breach through that area in a bullish manner, we could see wheat futures trading up to about 496.50 region, where we saw previous support and resistance, and then to the $500 area, that round number, where we could see some strong resistance coming in. In line with the market being bearish in those longer term time frames, and as we saw here previously with the rally around the Tenkan-sen and then the sellers coming in, if we do see strong selling come into the market, we could eventually see the market testing back down to the 466.50 level, and then perhaps beyond there down to 447.